Aloha, my friends. Yesterday, I placed these orders to sell a variety of put options on the financial sector, financial ETF, XLF. You can see here from this and this that none of these got filled. This is roughly the current trade price. When I click this, shows we were trying to get filled for 4 cents, trying to get filled for 6 cents. That was both at almost 1 penny. Closed at 1 penny right now. This one closed at 3 cents. We were trying to get filled for 10 cents and 20 cents. This one closed at 9 cents. We're trying to get filled for 26 cents. So what we can do is look onto the particular option chain. We're trying to sell a $31 strike price. The highest it traded for was 3 cents. Lowest was 6, and we were going for 4. Excuse me, the lowest it was 1 penny, and we were going for 4 cents and 6 cents. So just kind of priced ourselves out of that at the $32 strike price. Highest it traded for was 10, but maybe it needed to go to 11 for us to get filled at 10, and so we weren't even close to that. So we'll just cancel these orders. Cancel them both. Come on, cancel for me. That's out of there. We'll cancel this one. Cancel. All right. Cancel those. And there was one, I think, right here. We see the highest that sold for today was 15. Lowest was 8. And we were at 26. So what we'll do with this one is, how about we'll replace this? What was that at? 15. Let's see if we can, we'll change this to 15. We'll put that in under open orders, and then let's sell another one over here, and we'll put this at do a long shot at 20 cents. Now, if you're thinking, oh, 20 cents, why are we only getting 20 cents? Keep in mind, when you're dealing with options, it's 20 cents per share, and we're dealing with increments of 100 shares. So let's see what happens there. Going to open orders. It's less about trying to maximize the amount of money at this video. It's more about just like we're going through the motions of selling these options, so these videos can show that the full process of it. And let's see. So let's look at the actual stock. XLF. This is a quick look at it. 1 month, daily. We got a 200-day moving average up here. This is our candle today. Let's see if we can look at it with a little more detail. Now we're looking at 6 months of data from left to right. Each candle still representing 1 day. It had a pivot around here, and I'm not sure. Maybe you heard about the banking stuff that happened, and obviously a lot of people are feeling comfortable with that. Let's look at J.P. Morgan Chase, which very well could be inside this ETF. Boom! Look what happened there. We can double check. We can do one of these. Yahoo Finance. Go to the search here. XLF. And then you're going to go to see here, holdings. Look at this. This tells us the top 10 holdings of XLF. That's a little, almost 54% with these stocks. And here it is, JP Morgan Chase, Berkshire Hathaway, Goldman Sachs, Visa. We could look at all those individually, but we see here what happened with JP Morgan Chase. I'm sure that had a nice added a nice amount of upness to the XLF. Look at this tremendous amount of volume that came in. This is not it's not normal. See, here's this line right here is showing the volume average for 50 days. It's kind of like a moving average, but instead of a stock price, it's volume. When you see big spike up like this, that's institutional money in there. Or maybe you could say, well, it's not institutional money, it's family office money. Well, whatever, you know. Like, I get it, you know, but it's not retail investor money doing that. So that probably had a good push up on it. But these videos are not about technical analysis, right? We're more focused on selling some put options. And if we get filled, which I'm trying to get filled, not just get filled, but get assigned, and then we can sell some covered calls. Just do the wheel strategy here. Let's go back to the XLF. We got 3 days left to expiration. You want to go wild style? Should we sell a put option at 30 just to see what happens? Looking at the delta, we'd have roughly about a 36% chance of this getting assigned. The highest price it sold today for was 49 cents, so we potentially be able to bring in a little less than $50. If we go down to 32.50, right, we're making significantly less money, and the risk though. Does that technically, is it half the risk from 36 delta? It's a little more than half the risk. It's just tiny bit. It's like half the risk, but yeah. So little. Why don't we try that? Let's do I want to do the short dated contract just to cycle through this a little faster. Now sometimes I do these depending on what the situation is. Sometimes I sell them longer. It's kind of a variety and depends on a variety of situations. So all depends on what's happening. The lowest price it sold today was for 7 cents. Let's look at the chart again real quick. 32.50, and let's do this. We're going to look at the cone of probability over here. Before we look at the cone of probability, let's look at these moving averages. All right, so we're moving up to that 200-day moving average, and just based on like how everything else has been moving, you know, by the end of this week, is it going to really fall down? Here's our 32.50. You can see a little bit of a line right there. Let's look at that cone of probability. All right, so the cone of probability. What is the expiration date we're looking at specifically? Get back over here. The 21st, April 21st. So down here on our date, it's fine, April 21st. 32.50, you know, it's barely in that cone of probability. So let's do that, right? It's a little bit outside of it. It's sometimes I like to be right there, right? You know, it's kind of like living on the edge, you know, but not really living on the edge. Maybe it is. I don't know. It's totally up to you. Let's say, you know, living on the edge is maybe subjective. Is it subjective? I don't know. So what do we want to do? Okay, we'll do one. The lowest it sold is at 7. Let's try to do one at 8. Put that good till canceled. And we'll send that one in. Move this over to open orders. I like to have my different trades kind of separated here. I put this under open orders, and if it gets filled, then I'll move it to whatever category I want it to be in. You can do it however you want to do it. And let's do another one, but at like 20 cents, just to see what happens. 20 cents. Boom. Open orders. All right, so we got some stuff going on for XLF. how many minutes. We've been doing this video for about 10 minutes, and open orders XLF $30 strike price with how many days to expiration? Quite, I don't know, like a little bit around 30 or so. And then we got about 3 days to expiration. You see anything over here? Any sector ETFs you want to test something out on? Let's do this real quick. Like, look at the, all right, we got 3 days left to expiration. Right here at the money. Look at the open interest and the volume. This is pretty liquid, right? There's a lot of these contracts trading. And then we're going, as we go further away from the money, we see we still have a lot of contracts trading. Right? Look at all these contracts trading. Although as we're going further away from the money, and you know we're running out of time in the option life, we're getting less per day as it goes further away. But all the way down here to 3150, we got over 1,500 contracts being traded at the 3150. So let's just take a quick peek at what looks interesting. How about this? How about energy? Let's take a look at energy, and let's see. Let's look at selling a put option at $82. Let's see if we can get anything for that. It's kind of a far distance. So we can go like this. Turn this into X. Oh, come on, baby. Come on now. There we go. XLE. Okay. And what did I say? We're looking at look at something at 82. So 82 cone of probability. 80. What's the date? The 21st. Let's look back at that. Now keep in mind, this cone of probability, this is not a guarantee by any means. What date was that? Okay. April 21st. All right, so April 21st, there we are at the 82. I think that's what I said, 82. Outside of the cone of probability. It's just the standard deviation, right? It just gives you a little extra, input, but it's not a guarantee. Now we're looking at 1 year, 1 day here. This is the volume profile. If you look at a different time period, you get a different volume profile, right? But we see here's where the bulk of the transactions were out of this year, right? Out of 1 year information, 1 year data, coming in at $80, and right now we're closed at 86. So it wouldn't be surprising for it to fall back, but in a couple days it's probably not going to fall back all the way to here. And look at this, like we're in a range where there's a lot of. You look at this right here. This isn't that much further away from this. Like this, compared to this or this, that's not much volume right in there, right? So in the next couple days, it's probably just by looking at this. What am I seeing here? I wouldn't doubt if in the next 3 days it sort of stayed in this range right here. It looks like we got a good amount of support resistance right through there at 84. So, and we're on top of all these moving averages. 80, here's 84, 82. We could even let's look at 84. Even though 84 is inside of this cone of probability, but look at this is 83, 83, right? We're barely inside of that cone of probability, but we are inside of it. So let's see what we might be able to get. What kind of cash can we get? And let's look at the. Now, what do you notice here compared to XLF, right? Not as liquid, right? There's not nearly as many of these contracts trading, where XLF I think was in the, let's take a double look at that. XLF, look at this. 24, all the way over here 70,000 contracts, 3 strikes away. In XLE, for the energy sector, right? Not nearly as liquid. Not nearly as much interest. For some reason down here at the 80, pretty liquid. But 84, you know, we might be able to get, it's pretty rich premium though. I mean, does that have to do with being a more expensive stock? I don't know. Maybe. But the 84, okay, we had almost about 5. Okay, you're kind of getting close to 600 contracts trading today with a little bit less than 2,500 of open interest there. And what's our delta? 16, so roughly about a 16% chance of getting assigned on that. And sold for, highest it sold for is 25, lowest at 13. So it's a pretty big spread, right? You see that big 15 to 24, pretty big gap there. And we notice that at the 50-cent increments, no interest. Not it's really not that wanted. But let's look at that 84 and we'll hit this. So we'll look for the mid, right? So the mid, we have, see this natural NAT for our natural. Pretty, if the market was open, we know we're going to get filled at the natural. The mid is between 15 and 24. We might be able to get that. Let's try for that. And good till cancel. Right, this order confirmation dialog is basically telling us what we're doing. And go over here, shows you the risk, all types of stuff, buying power effect, all these different things. We'll just send it in there. But those are things you need to know. Obviously, I'm not explaining those on this video right at the moment. Something else that you want to be aware of is, let's say we get filled on all of this stuff. Do I got a calculator here? I do. Okay, great. So right now, none of this is open, but since we're selling cash secured put options, it's good to know how much commitments you're making, right? So 84, how many contracts are we trying to get here? 1. Okay, so that's going to be 84 times what? Times 100, because it's one contract, but each contract represents 100 shares. Not 1,000 shares, not 1,000 shares, 100 shares. So you can do the mental math, right? 84 times 100 equals 8,400. And we're trying to get one of those, so 8,400. But how for the XLE energy? How about for the financials? Well, we got 2 contracts here at 32.50. Right, so $32.50 times 100 shares. Actually, I will just do it that way. Times 100 shares times 2, right? 2 contracts, 1, 2. Obviously, I could have did times 200 shares, but whatever. So we got that. So with this one right here at the 32.50, that's putting us on the hook for 6,500. Then over here, if we get filled at this, it's the $30 strike price. If we got filled on both of them, it would be 200 shares, right? So $30 times 100 is 3,000 times 2 contracts, 6,000. So we got our 6,500 here, plus another 6,000. So we're at 12,500 plus this one contract on XLE with an 84 strike, plus another 8,400. So if all these things were to get filled, we are basically legally obligated to come up with a little less than $21,000 to fulfill these commitments we're putting into the market. Well, do we have that much money? Let's take a look and see. Stock option buying power. I guess I got this. where's my stock buying power? But overall, if we got this net liquidity here in day trades, we probably got enough cash sweep, cash. All right, we got over 100,000 in there. We got enough to cover this if everything were to get assigned. And this is a pretty important part of cash secured put options. You want to have the cash to secure these put options that you're selling. That will allow you to sleep at night. Now, don't get caught up in that thing called greed. You probably will be tempted, but just stick to having selling put options when you have enough cash to do it. Now, one time this guy was like putting on some comments on these videos talking about how, I mean, it's talking about a whole bunch of stuff. The guy really had he had a lot of sentences that he was typing out, and he wasn't apparently he was an older gentleman, but I don't know what happened during his public education, or what, how his education was, because he wasn't grammatically, it was hard to read. And one thing that he was saying though is he was saying something about, he was basically complaining about selling cash secured put options on something like the Qs. It's just the way the game goes, right? There's certain games if you're going to play the game of basketball, then and if you're only 4 feet tall and you're playing against everybody that's 6 foot tall, that's the game. That's the way the game goes. So don't complain that everybody's 6 feet. That's the game you're playing. And if you don't have that, so what I mean by that is, if you're playing this game of cash secured put options and you want to be selling options on XLE, and you're looking at about $8,000 per contract, and you only have $1,000 in your account, then come on, genius, then pick a stock that fits in your budget. Don't be complaining. You just do what you need to do to play the game. Now, if you want to be a genius and you want to complain, yeah, go for it. It's not going to affect my bank account. It affects your bank account. And it doesn't affect my mood. It affects your mood. But I'm trying to give you some helpful advice here on how to be successful at that, because or at this game, because in 2023 and going forward, I believe if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be doing this, not to be selling cash secured put options on stocks you'd be happy to own. But cash secured means you got to have the cash. So if you don't have the cash, then pick a stock you got the cash on, right? That's just the way the game goes. And for the people that are going to complain, just deal with it, Buttercup. What do you want me to do? Play a different game. I don't know. Do what you got to do. But I would say just deal with it and find some stocks that are in your budget so you can implement this, because you can do this without spending a lot of time in front of a computer screen. In fact, I was just traveling, right? I was traveling, and you're able to do this pretty much wherever you go. And I had these option contracts in this paper trading account. I had these option contracts expiring while I was 24 hours on planes and in airports coming from Florida back to Hawaii. Didn't even pay attention to what was going on, and it didn't matter. And I'm going. How many minutes do we got here? I don't know. It's not showing me. Anyways, you know what? I'm just going to end this right now. You got to take what's valuable out of this, implement it into your life the way you can. If you can't find any value out of it, then that's on you. Me personally, I'm the type of person I can find value out of a lot of things, because my why, my drive to get things done is so high. So you gotta do what's best for you, and Mr. Brent gotta do what's best for Mr. Brent. I will talk to you guys mañana.